Starting, all attendees are in listen-only mode.
Well, good afternoon, everyone. Welcome to today's seminar, today's webinar. It's a particularly challenging time for charities at the moment, so I hope that a seminar or a webinar on Gift Aid today will be helpful for you. It is a basic one, but it struck me as I was looking through the slides a little while ago that there are things that charities can do to make sure their houses are in order for Gift Aid, and I'll try and pick some of those up as we go through. This is a first for us because my colleague Lizzie, whose name you see on the screen, is running this from her house in Wokingham, and I'm sat in a small village in North Oxfordshire, so this is our first remote webinar for guests, so welcome. So, what is Gift Aid? Gift Aid enables charities and community amateur sports clubs to reclaim tax on cash donations that are made to them. It has to be a cash donation. There are different measures for charities that are lucky enough to receive gifts of listed shares or property, but this is only on cash. And what it does, it means that for every £1 that's been donated to a charity, the charity can reclaim 25p in the pound for every pound that's been donated. If you are the donor and you're a higher or additional rate taxpayer, that is, you're paying tax at 40 or 45%, then you get tax relief at your marginal rate, which means it costs you something like, if you're an additional rate taxpayer, it costs something like 68p in the pound, rounded, to make a donation. If you are a basic rate taxpayer, you are no better off and no worse off, other than the charity's been able to get an extra 25p. And if you're not a taxpayer at all, then you will need to pay an additional 20p over to HMRC. So to get Gift Aid, you have to be registered as a charity or community amateur sports club with HMRC. So that's the first hurdle to get through. Okay, so we're taking a little while just to scroll through there. What can you and cannot have Gift Aid on? So it's got to be donations made by individuals. There's no limit on the amount that can be claimed. It's a completely uncapped relief. So whether you give £1 or £100,000, it can all qualify for Gift Aid. There can be no condition as to repayment. So you can't receive a loan from an individual, and then if the individual says, actually, I don't need you to repay the loan, then claim Gift Aid on it. If you've got any of those, then my suggestion would be repay the loan to the individual and then have the individual make you a donation in cash. The donation to you can't be deductible from that individual's income, by which I mean if you're a sole trader or a partnership, for example, you can't have it as a deduction in the partnership profit and loss account or the sole trader's profit and loss account and then claim Gift Aid on it. We'll talk about companies for the last bullet point there. Finally, can't be part of an arrangement for the charity to acquire property from an individual or connected person. So I can't make a donation to a charity on which it can claim Gift Aid, which it then uses to buy my house or shares in a company that I own or something like that. Can't be part of an arrangement. The very final bullet point on that slide, it relates to companies. So if a company makes a donation to charity, that's fine, but the company gets a deduction from its corporation tax liability. It gets it as a deduction against profits of the company. So the company gets relief, and the charity, if it receives £10, just gets £10. It can't claim any more Gift Aid on that donation. Okay, so what is not a gift? If you are paying, for example, school fees for a particular person, something that you're buying, whether it's books, food, and so on, that's not. If you're paying for admission to events such as concerts or dinners, that doesn't work, but I'll look at split donations a little bit later. and we'll come across that if you're doing fundraising events, perhaps, or payments to for raffles, lottery tickets, and 100 clubs and so on. They don't qualify for gift aid. So let's have a look at gift aid declarations. They can be made in writing, they can be made orally, or they can be made online. I am not a great fan of the oral one for reasons I'll explain in a minute, but certainly in writing and online work well. The gift aid declaration must contain the name of the charity or the community amateur sports club, the donor's name, as a minimum, their initials and their last name, their home address, which has got to be at least the house number and the postcode, whether the declaration covers past, present, or future declarations, or whether it's just a single one-off, and a statement that the donor wants the gift aid to apply, and that can easily be a tick box, particularly for a written or online declaration. It doesn't need to be signed, though some charities think it will add more weight to show more commitment by the donor if it has got a signature, but it doesn't need to be. It can be on your charity's note paper or in any form you like. I think that's probably most of what I want to say there, other than I can think of seeing sponsorship forms in days gone by where the charity can treat the sponsorship form, if submitted with the cash, as sufficient evidence for the entire gift aid reclaim. I can see that where one's gone around the office, the first person has put Joe Bloggs care of and put the office address, and everybody else has put a ditto beneath it. That's not valid because it hasn't got the home address in. So please, please, please make sure that if you've got people raising money for your charity, that they do get that bit right. And clearly, with that last but one little arrow point there, the revenue will look, if they do an audit, to make sure that the money on which you are claiming gift aid is covered by the gift aid donation. I.e., if it says it's only going to cover present donations and you've tried to reclaim previous ones from that donor, a gift aid reclaim will be denied. Now, declarations can cover all donations in the last 4 years. That's because charities have 4 years in which to make a gift aid reclaim, and they must contain something like the statement there. In days gone by, people thought that if they paid VAT on goods they bought, or the tax they paid was their council tax, that would be sufficient to cover a gift aid form. It isn't. It can only be income tax or capital gains tax. That's fine. And they have to understand that if they make a series of gift aid donations or donations under gift aid to different charities, the amount of tax they pay has got to be sufficient to frank all of those donations in aggregate in any one tax year. So there's my first point for you, is that if you've had a series of donations from a particular donor, it might be worth going back and looking at all of your gift aid forms to check that you've reclaimed as much gift aid as you can. And if you've only got one from somebody that covers present and future donations, but you know they've given to your charity in the past, it might be worth going back trying to get them to include any donations they've made to you in the last 4 years. And in a time when we see on the news on a daily basis that charities are struggling with falling income and falling donations, that might be worth an exercise doing if you've got access to the gift aid records, to go back and just check that you're getting as much gift aid as you possibly can. Just one other little point. Up to April 16, partnerships could make a gift aid donation, provided there was a representative partner that you knew was a representative partner, and the partnership deed gave the representative partner the authority to make a gift aid donation on behalf of the partnership. They could do so. That went out the window on the 6th of April 16. So if you've got any donations from partnerships, you've got a few days to go back and check those. Now they have to be given by the individual partners. it doesn't surprise me that, or it didn't surprise me that the revenue made that change, because really it was quite difficult getting them out of partnerships. You never knew whether the partnership deed contained the authority for a partner to bind the partnership in that respect. So it was always much easier to get them from individual partners, and I would always have advised that anyway. But now it's mandatory. But you have got a few days till the 5th, so another 4 days or 5 days to go back and check those, just if you've got any partnership declarations. I think I've only seen them very, very rarely, so the probability is low. So if you keep your gift aid declarations electronically on a document management system, then the declarations can be scanned and the originals can be destroyed, provided they're being capable of being viewed and printed. But given that most people would save them as a PDF in some form or an email, then that's absolutely fine. The reason I don't like oral declarations is because you either have to keep an audio recording of the oral declaration, or if not, then within 30 days you have to send a record of the declaration to the donor. It's got to contain all the things in it that the written gift aid declaration has, and you have to send that within 30 days of getting the oral declaration, and you can't make a tax reclaim until you've sent that letter. So there's almost as much admin in getting an oral declaration as there is in getting a piece of paper out of the individual in the first place. And of course, a donor can cancel their declarations at any time. So if you had somebody who was a basic rate taxpayer and then fell out of the income and capital gains tax net completely, they could cancel their declaration from a particular date, and you have to keep a record of cancelled declarations. So how long do we have to keep records for? Well, the answer is, if it's your charity set up as a trust or a community amateur sports club, then you must keep gift aid declarations for 6 years from the end of the tax year to which they relate, so the tax year ending on the 5th of April. And if you're set up as a charitable company, charitable incorporated organisation, or a company limited by guarantee, then you should keep the gift aid records for 6 years from the end of the accounting period to which the declarations relate. If you have an enduring gift aid declaration that somebody gave you a long time ago, then you have to keep it for 6 years from the last date that a donation was made. And I think I would encourage charities to stay in touch with their donors. I'm sure you do anyway, and periodically get an updated gift aid declaration, because somebody might have moved house, or if you're staying in touch with them by email, people tend to keep their email addresses, but they may just forget to tell you that you've moved house. But I'm sure you'll be wanting to send them your newsletters and all that marketing material anyway. So if you find it's being returned, or periodically you put in there, please let me know if you've moved house, and it's gone to a forwarding address, and I'm sure they'll stay in touch. So how can you make a gift aid claim? Well, you can make it online. It should take 4 weeks, or in paper, and it will take 5. But you have to produce a schedule with it, which I'm sure you're familiar with details of who the donors are and what the income is on which you're claiming gift aid. So to make the claim online, you have to be recognised by HMRC and have to have had Charities Online added to your account, your digital account with HMRC. You can use the revenue spreadsheet for up to 1,000 donations, or you can use commercial software. And indeed, a number of the charities that I'm with use software where it will automatically generate their gift aid claim on a periodic basis when they choose to do so. But you have to use it if you've got more than 1,000 donations, which I guess could happen if you had a big event and lots of individual people donating. If you go by paper, then that's the form to use, the CHR1. It has to be signed by an authorised official, nominee or collection agency, and HMRC in recent times have been getting a little bit stricter on that to make sure they've got the right people, the right authorisations, and the right place to send the reclaim in order to reduce the risk of fraud. And that's just sensible to me. Okay, so I think I've mentioned this before, the 4-year time limit for charitable trusts and community amateur sports clubs. There's a 4-year time limit from the end of the tax year. That's the one ending 5th of April, in which to make a claim. So if you've got any claims outstanding that'll go out of date on the 5th of April this year, that could keep you busy over the next couple of days. And if you're a charitable company, then you've got 4 years from the end of the accounting period. So anybody who's got a March year end, again, might like to have a look at that in the next few days, just to make sure nobody slipped through the net. You can make claims as often as you want to. If it's a small claim of less than £100, then it may not get paid out if the charity claims more than once a year, and it'll get aggregated. The next bullet point I think I've already covered with oral declarations. And if you've got aggregated claims for individual gift aid payments, provided they're not more than £20 each, then you can aggregate up to £1,000 per entry. But, please use sensible descriptors and keep an audit trail to support that entry on your gift aid claim. Where you've got sponsored events, then the individual may be sponsored under gift aid by other individuals. I'm assuming here that if there's an entry fee for an event, that the individual taking part will have paid that themselves. Otherwise, you have to be a little bit careful about what you claim gift aid on. So if there was an entry fee for, say, doing the London Marathon or something like that, first of all, if the individual was going to get some benefit, and that probably is one where they would, you would probably knock out any gift aid on donations made by family members, but try to get the individual to pay their own entry fee, so that then they can reclaim gift aid, or you can reclaim gift aid on all of the sponsorship money that they managed to raise. And particularly for events where you say, look, it's hoped that you would raise this much sponsorship money, rather than it's a requirement, that might make the gift aid reclaim a little easier. So when the charity makes the claim for gift aid for an individual sponsor, then you only need to make a single line entry, rather than breaking down everything that they've put on their gift aid reclaim forms. But as I say, retain the sheet, please, so that if the revenue come along and do a gift aid audit, you've got the evidence there back in the office. So let's have a look at the small donation scheme. This can be quite helpful, because if you've got a cash tin, you can reclaim on small donations without a gift aid form for donations up to £30. It was £20, but it went up to 30 when the revenue realised that actually that's the maximum amount you can donate with a contactless credit card. So it's £30, and you can claim on donations of up to £8,000 in aggregate in any tax year, which means you can get back to getting up back to £2,000 from the revenue, and that's from April 16. There are conditions. First of all, you must have claimed gift aid in the same year, so you can't just claim it on small donations. You must have claimed gift aid in at least 2 of the last 4 years without a 2-year gap. There must not have been a penalty. So if the revenue have done an audit and you've got a penalty, that will knock you out for the next 2 years. And your gift aid claim can't be more than 10 times, sorry, your claim under the small donation scheme can't be more than 10 times your gift aid claim, which I would hope it isn't. I'd hope you're getting more back. But if you're a religious organisation that passes a plate around, then it does open up the scope for doing that. Just a final bit on that, on the small donation scheme. If you've got a community building, such as a village hall or a religious building, then you can claim the gift aid small donation scheme in the community for collections in the community building, or in the same council area as your community building, but you must have at least 6 events there, which have to be attended by at least 10 people at each event. That's not an average, it's at least 10 people at each event. How you would the revenue would ever police that or know it, I don't know, but that's what the rules say. So, donor benefits. Those who remember back to deeds of covenant, when people used to make deeds of covenant to charities, will remember that it had to be pure income profit in the hands of the charity that received it, and you couldn't have a benefit. When the gift aid scheme came in I think 2000, it was a much more relaxed regime, but there were donor benefits rules which were complex to understand, and you had to look at them for each case, and charities didn't understand them, and I'm not surprised. So now a donor can receive a benefit as a consequence of making a gift, and you can still claim gift aid on their donation. So if a donor receives a benefit, you need to think about the donor benefit gift aid rules. However, if you make a benefit available to somebody and then they make a gift to you, the rules don't apply, unless of course they go on and continually make gifts to you. But you do have to watch out if the benefit is provided to somebody, to a donor or somebody who is connected, and for this it means spouse, relatives, spouse or civil partner or relative, and companies under the control of the donor or someone who is connected to them. Now, it is difficult enough to understand who those people might be, but I think so, unless you know and you've taken reasonable steps to make sure that if somebody gives you £100,000 donation, that there is no benefit going to a member of their family or to a company that they're connected with, you've probably done what is reasonable. So, as I said there, the donor benefit is something provided as a consequence of making of the donor's gift, and it's not the other way around. But things that don't count as benefits, so an acknowledgement in a programme that somebody sponsored an event, that's fine. A right to view property, where the donation is at least 10% more than the entry fee, and the admission rights for at least a year. So I think the last time I went into Kew Gardens, the entry fee might have been at £10, but you could gift aid your way in for £11, and actually if you were a higher rate taxpayer, it was more tax efficient to donate under gift aid and get in than it was just to pay the £10 entry fee. Rules for families can apply, so you can make a gift aid payment for 2 adults and 2 children, that's fine. If you do a fundraising event in honour of a donor, that's fine. And if you have naming rights for boats and buildings, then that's also fine. I can think of sitting at one dinner that was fundraising for a charity where there was a right to name rowing boats. And in that case, the lettering was all in standard black script. It was not in script that was relevant to any of the donors, so it's just standard black script on the boats, and tables clubbed together to buy boat names as they were auctioned. And in some cases, the right to name a racing ape was going for a considerable sum of money. But trying to find out who on the table was going to sign the gift aid voucher, or how many people on the table was going to sign the gift aid voucher at the end of a dinner, at the end of an evening, was quite a game, believe me. But those are the lengths you have to go to if you want to get the gift aid. So there are limits on the benefit value, and there are 2 things I'm going to consider today. First of all is the relevant value test, which is the maximum benefit for a particular donation. And then secondly, there's an aggregate value test. So the aggregate value test says the benefits in a tax year cannot exceed £2,500, and that's for all donations after 6th of April 2011. So if you've got gift aid claims, these rules well predate the 4-year time limits, that's fine. And you have to pass both tests. There are also annualizing rules, which if you've got things where benefits can apply for a year, you have to look at those. Those are quite complicated, and I'm not going to go into those today. If people want to know, then let us know, and we'll pick that one up at a separate time. So benefits are, if you make a donation of nought to £100, then the donor can receive a benefit of up to £25, 25% of the donation. So if somebody donated, let's say £100, and in return they got a copy of the Charities magazine free, which was published quarterly and sells in the shops for £5, the benefit they would get would be £20. That's within the 25% of the donation. That's fine. You can claim gift aid on it. If they pay £101 plus, then you get the £25 plus 5% on the donation in excess of £100, up to, say, a maximum benefit of £2,500 in any one tax year ending on the 5th of April. So let's have a look at an example. Sorry, the numbers are perhaps a little small there, but if we just go through those in total. These are for the year ended 5th of April 2017. If somebody made a donation of £30 with no benefit, then that's fine. You can claim gift aid on that. They then give us further £10, no benefit, that's fine. You can claim gift aid on that. Further 25, no benefit, that's fine. You can claim the gift aid on that. And then on the 5th of February 17, they give you a donation of £80, and in return they get a book worth 30. Well, that fails because the £30 is more than 25% of that one individual donation. So what you might choose to do there is to say, okay, we'll sell you the book for £30, which is its retail value. Would you like to give us the £50 as a donation, and do it that way? So split donation, that would have been fine. And then on the 11th of March, they give you £9,600, and in return they get a weekend break worth £450. Well, that's absolutely fine because it passes both the relevant value test and the aggregate value test. That's fine. And then on the 4th of April, they give you £50,000 and they get a package of benefits worth £2,500. Okay, so that passes the relevant value test, but in that particular year, they've already had, that would tip them over the limit of the total number of total value of benefits they can get in the year of £2,500, so that one fails. So the slides are available afterwards. If you want to have a look at that one and come back to it, then please do so. Okay, split valuations. I think I've covered the first point there on that one. Valuations can be a bit tricky. If you've got something that is commercially available and sold to the public, then the value is the sale price to the public. So if you're doing a charity auction, let's say there's a ride-on lawnmower that normally retails at £1,500, who'd like to start the bidding at £1,200? Please, 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 please make sure that the auctioneer at the start of the auction says, and this normally retails for £1,500, because then it has made it very clear to the people who might bid that they are bidding for something which has a commercial value, and it says what the value is. If that's done, then you can claim gift aid on the £100 if it goes for £1,600. In other cases, you have to look and say, what would the arm's length price be? If there is no commercial value, so if you had, let's say, a rugby shirt that was signed by all of the England Six Nations squad for 2020, you would know what the price of the rugby shirt was. But if they'd only signed one that year and there was no commercial price, then I'm afraid that denies you gift aid on the receipt. However, the revenue are relatively flexible and they'll accept any method of valuation that the revenue deems acceptable. So provided you're sensible about valuing something, then you will probably be able to reclaim gift aid on it. So we're coming towards the end now. The benefits of gift aid. If the charity receives £1, then it can turn it into £1.25. For a non-taxpayer, they pay £1 and it costs them £1.25. A basic rate taxpayer pays £1 and it costs them £1. A higher rate taxpayer pays £1 and it costs them 75p. An additional rate taxpayer pays £1 and it costs them only 68.75p in the pound. So don't forget, you've got 4 years in which to claim it. But also, if you're an individual, if I made a gift aid payment on the 6th of April 2020, I can relate it back to my previous year's tax return and claim tax relief on it, provided that my tax return is filed by the following 31st of January, provided that by the time I put my tax return in, I have claimed the gift aid relief for the previous year and my tax return isn't late. So just remember that for a generous donor, if they haven't filed their tax return and their tax affairs are up to date, then they can make a gift aid payment and relate it back to the previous year. So that brings us to the end of today's webinar. I'd like to say thank you very much for joining us. If there are things that you can do, particularly in the next few days before the 5th of April comes up, to reclaim gift aid that's outstanding, then please think about doing that. Perhaps when charities are in a quieter time, gives you a chance to review existing gift aid vouchers and check that they are all still valid, that addresses are valid and so on, and get updated ones. Perhaps it gives you a chance to make sure that you're claiming as much gift aid as you possibly can. So I think before I say goodbye, I just want to say thank you to my colleague Lizzie Uzzle, who's been running this from Surrey, and goodbye from me sitting at my kitchen table in North Oxfordshire. Thank you for attending.